So if you've been watching crude oil prices, they've been all over the place, swinging up, swinging down. Especially June 4th on Sunday, we saw a big spike in oil prices as the futures market opened up on the news that more oil cuts were going to come out from Saudis and the OPEC countries and whatnot, which caused that spike on the news on Sunday futures market open. But then if you noticed, that the prices of oil came back down, basically filled that gap. So what's going on, right? I thought the supply was being cut, a million barrels off the market per day. Shouldn't that push oil prices up? It did temporarily, but we're seeing it. Oil prices continue to be under pressure. Is there more here that we should figure out, or more here at play that is telling us about the situation in the economy, in growth, or something about this recession that we should be worried about? Now, before I get into that, my name is Daniel. You're watching InfraVest. InfraVest is an organization that promotes financial literacy, teaches you about the macroeconomics news. We cover stocks, bonds, commodities, currencies, forex, and we also cover crypto. We've got a couple courses on how macro and investing works together. If you are interested in that, just check out the link in the description and you can read and learn more about our courses. Now, crude oil prices did spike Sunday, retraced. We're seeing crude oil prices continue to be under pressure. What is it? I thought that the supply constraints and the issues that are happening globally are supposed to keep prices elevated, but it's not. That's not the case. We've been seeing oil prices come off since last year, since the whole spike, and continue to be in this range motion with more of a downward bias, downward pressure in the prices in oil. Now, when you look at how oil is trading here, it's no matter what news is coming out in terms of production, no matter who is cutting production, you still always see oil prices spike up and then come back down and reverse the whole move that went up. And that is because of the demand crunch, the demand problems, the demand fear, right? The recession, basically. And oil is a very good indicator of where the markets are feeling in terms of growth down the road, right? So on oil, it's not only about the supply curve. It's definitely very important, and definitely oil prices tend to be really reactive when it comes to supply, right? Because if you think about it from supply and demand point of view, the demand point of view is that you always need oil, right? If you're going to work, you'll need oil. You'll need gas to pump in your car and head to work, regardless of where the price is. But then when it comes to supply, if there's shortages, you'll definitely see big changes in the oil price and in the market itself. And if there is a big production of oil, a huge supply of them, then definitely you will see the same thing there. Just like in 2020, when there was an inflow of all these oil barrels, and actually the futures contracts in 2020 went into negative, the front contracts went into negative territory, where oil was basically being priced negative $10, negative $15, and so on. Never seen that in history before with the COVID pandemic, and that was because everyone was being told to go home, stay at home, and all these oil barrels that were sitting there was costing the producers to hold it there, so they had to get rid of it, and they were getting rid of it at any price possible because storage cost would be eating up a lot into their profits, and it would cost them more to just store it and keep it on the side. That's why oil prices went into negative prices, because they were literally paying people to get this inventory off their shelves. So now what has happened? Well, there was after the whole pandemic issue and things started to get a little bit better, supply constraints happened, right? Tensions between the West and the East, the war with Russia and Ukraine, prices just shot up to $130 per barrel. And now we see oil trading around, if I look at it right now, around $70 per barrel, around that level. And we're seeing oil continue to be under pressure, no matter how much news you hear that, hey, we're cutting supply. Hey, we're cutting supply. You get a temporary bump up in the markets, but then what happens afterwards? The prices reverse back and you see some selling pressure. And again, it has to do all with the demand side, the fears of recession, the fears of that, hey, employment could get worse off in the future. Right now, it looks robust and strong, but hey, check it out. A lot of countries are feeling the pinch and pain and feeling that recessionary vibes, and we see something down the road that could be, again, recession, and that's going to be the demand crunch, less need of oil, less demand of oil, and as people lose their jobs, less need to have their cars to drive to work. In fact, they'll probably maybe even sell their cars, as many of them bought cars on cheap credit, cheap loans, and if they lose their job, they won't be able to make those car payments anymore, right? So there is a trickling effect there, and it's the demand side of things that is overshadowing and clouding the oil markets here and keeping it under pressure. On top of that, you look at other countries, like for example, China, when it comes to their imports and exports number that came out recently, you see that the imports and export number, especially the export component of it, heavily affected. So even China, who is a big consumer of oil, is feeling pain within their country, and you're seeing the demand crunch. It's not just a story in the US and Europe and so on, but China as well, who everybody thought China was supposed to be the driver of growth. They're reopening since COVID. It's supposed to lift up the oil prices, lift up the economy all over again. And what exactly happened? The opposite. Right? It's very funny. The whole world and the consensus view was that things were going to get better, growth was going to get better, and that was not the case. World Bank also was saying that, hey, 2023, we're going to see growth getting better. 2024, not so much, but 2023, we see growth getting better and things are going to get better. But the oil prices are not agreeing with World Bank and with the story that other people have that, hey, this is a soft landing. The Fed saying soft landing. Oil traders are not agreeing with that narrative. And you see it in other parts of the data, especially with Chinese exports and imports. You're seeing the weakness there, and you're seeing the trading activity in oil, that every time you get news about the supply constraint, the supply cuts, what happens to prices? Pops up and comes back down, which tells me one thing: there is fear of a demand crunch, fear on some sort of recession coming down the pipeline very soon. Let me know what you guys think. Leave a comment below, subscribe, hit the like button and bell icon to be notified on the next video, and I'll see you guys around. Cheers, bye.